Join me as I dig deep to expose the truth behind WULF stock and see if I can uncover what they've been hiding. WULF stock has been making waves lately, with its popularity skyrocketing in a short amount of time. This sudden surge has left many investors scrambling to get in on the action, but with great returns comes great scrutiny. There are whispers of controversy surrounding WULF, and today we're going to dive in and see if we can separate fact from fiction. One of the main concerns is the company's financial health. A quick look at their balance sheet reveals some red flags, including a significant amount of debt and a history of operating losses. This has led some critics to question whether WULF is truly a viable long-term investment. Another concern is the company's lack of transparency when it comes to their business dealings. There have been allegations of shady dealings and unclear partnerships, which has left investors wondering what they're really getting themselves into. The risks associated with WULF stock are very real, and it's essential that investors do their due diligence before jumping in. With the company's stock price fluctuating wildly, it's crucial to consider whether the potential rewards outweigh the potential risks. Some experts have even suggested that WULF stock may be a prime example of a pump-and-dump scheme, which could have devastating consequences for unsuspecting investors. Furthermore, it's also worth noting that WULF operates in a highly competitive industry, where companies are constantly vying for market share. This has led some to question whether WULF has what it takes to stay ahead of the curve and remain a major player in the industry. WULF's history dates back to 2019, when it was founded by a group of entrepreneurs with a vision to disrupt the tech industry. Since then, the company has undergone significant changes, including several high-profile acquisitions and partnerships. One of the key players involved in WULF's early days is CEO John Lee, who has been instrumental in shaping the company's strategy and direction. Recently, WULF has been making headlines for its involvement in several high-profile deals, including a major partnership with a leading tech firm. However, some have raised concerns about the company's governance and whether its leadership team has the experience and expertise needed to navigate the complex tech landscape. Additionally, there have been rumors of internal conflicts and disagreements among the company's top executives, which has led some to question the company's stability. Despite these concerns, WULF has continued to push forward, announcing several new initiatives and products aimed at expanding its offerings and increasing revenue. The company's stock price has responded positively to these developments, but it's unclear whether this momentum can be sustained in the long term. One recent news story that has contributed to the current narrative around WULF stock is the company's decision to expand into new markets, including Asia and Europe. This move has been seen as a major step for WULF, and could potentially open up new revenue streams for the company. The most surprising piece of information that could change your perception of WULF stock is the company's connection to a group of influential investors, who have been quietly backing the company for years. These investors have a reputation for using aggressive tactics to drive up stock prices, which has led some to accuse them of manipulating the market. If true, this could have significant implications for WULF stock and its investors. This connection raises serious questions about the company's governance and whether it's truly operating in the best interests of its shareholders. It also highlights the need for greater transparency and accountability in the company's dealings. Investors need to be aware of the potential risks and not just focus on the potential rewards. Another critical piece of information is the company's involvement in several ongoing lawsuits, which have been filed by former investors and business partners. These lawsuits allege that WULF engaged in deceptive business practices and failed to disclose key information about its operations. In light of these revelations, it's clear that WULF stock is not without its risks. As we've discussed, there are concerns about the company's financial health, governance, and business dealings. So what does this mean for current and potential investors? In summary, WULF stock has been shrouded in controversy, with concerns about its financial health, governance, and business dealings. As an investor, it's essential to do your research and consider the potential risks and rewards before making a decision. What do you think about WULF stock? Have you invested in the company or are you considering it? Let me know in the comments below. Also, be sure to check out my other videos for more insights and analysis on the latest stocks and market trends.